Good morning, everyone. Voice is still kind of a mess. It's September 14th today. It is Thursday after the CPI report yesterday. Some very muted movement overall in the CPI. And we'll talk a little more about what the trade plan could be set out to look like today in the futures market as we're trying to rally a bit more before we can get some of these late shorts a little more trapped. But there's a few things to talk about first and foremost, right? CPI from yesterday, little recap. We rose 0.6% on the month over month and 3.7% on the year over year. A lot of this was fueled by higher gas and oil prices, higher housing price, and the stock market realistically cheered on the data, even though there were some concerns that the Federal Reserve might not allow the Fed to pause the hiking cycle, mostly assuredly ended or supposedly ended in July. So there were some core figures that signal that inflation is continuing to moderate realistically. However, the Fed is expected to keep one further hike on their dot plot until the end of 2023. And will that come out as a surprise in on September 20th next Wednesday or not? We'll see. But it's interesting because a lot of people were seeing that if we got any increase in the number realistically, we would see a massive drop in the stock market, right? Because 3.2% was the last year over year figure that we saw in the prior month. And a 3.6% increase. Not only that, but the actual number 3.7 that comes out would largely put some downside pressure as inflation is no longer being quote unquote tamed and reaching that 2% target of the Fed. However, as we saw, right, stocks didn't necessarily care. We got a continued rally here. I think a lot of people are still bearish and they're opening up very large positions for the bear side. I think generally speaking, we pinned yesterday very well. And a lot of people are still getting squeezed out of their shorts as we enter into a period where we can get a little more of a buy stop run before the real shorts come out, right? We're above a lot of key levels and the buyers are very satisfied with this. It's about this next leg into the end of this week. Are we actually going to sustain some of this upside buy momentum, or what are we going to see from this? So that's one of the main aspects that that we had to talk about here, as we had some PPI numbers today as well that came out a little weaker than expected. So that prompted a little more of a pop in the markets, as we can see. So one of the main events in the news is the auto sector, right? The auto sector is on, is on watch as negotiations between the UAW union and Detroit car makers for General Motors, Stellantis, right, head down the wire, and things have gotten back and forth over the several weeks, but they haven't been looking good ahead of today's strike deadline at 11:59 p.m. Eastern, contributing to the tensions that has been the industry's shift towards EVs, right? Which has created new manufacturing dynamics, such as less of a need of engine and transmission plants, as well as new battery factories that are largely not unionized. So, to when we're likely going to have to take action, this is the UAW president, Sean Fain, declared, just as we approached our negotiations differently than we have in the past, we're preparing to strike these companies in a way they've never seen before. So with the rhetoric remaining charged, a targeted walkout is likely to first hit specific U.S. factories before an all-out strike envelops one or more companies, especially if it helps the UAW avoid a distributing strike to pay its 146,000 members. So at issue are the terms surrounding new 4-year labor contracts for big three auto workers. Demands range from higher wages, more paid time off, reduced work weeks, a return to traditional pensions, the elimination of wage classification tiers, and also shift back towards cost of living adjustments. However, the two sides have grown increasingly skeptical that each other, trading accusations of no genuine offers, negotiations in bad faith, and not showing up to the bargaining table. So a 10-day strike could cost the U.S. economy 5.6 billion in gross domestic product, right? According to the Anderson Economic Group, push the Michigan economy into recession. So the firm added that lost worker pay could equal to about 859 million, and lost automaker earnings could be 989 million dollars, right? So while continuing to deplete dealership stock levels and impacting prices, a disruption could also lead to a sizable economic blow to the broader economic network, like parts suppliers, including Lear Corp and Magna International. So, excuse me. Ooh. So, a lot of things are at stake here, realistically, right? A lot is at stake. A 10-day strike could really turn things on its head. In other news, we also have IPOs that are coming out today, right? ARM, the British chip designer ARM Holdings, right, has listed its initial public offering of 95.5 million shares at $51 a piece. So, at upper end of expected 47 to $51 range is going to be the IPO. This gives ARM majority ownership, or majority owned by SoftBank, a valuation of $54 billion. So the IPO was oversized by 10 times, with major companies such as Intel, Nvidia, Apple eyeing about $735 million of the float. And we've seen analysts believe that the IPO price is very generous, saying long run investors are better off waiting for lower prices, while Kavanaugh Research says that ARM leadership in the CPU industry and its AI involvement make it an attractive investment opportunity. I can see that as well. I think that ARM is just used in pretty much everything, right? Their chips and the use of ARM products is pretty much everywhere, and I think it's going to be a very good opportunity for the long run. It's going to put an uptick on semis, right? I don't know if the IPO does extremely well, but I think in the longer run, there could be more attractive prices where they become long-term investment opportunities in this specific name. It's not necessarily like one of those growth names that we've seen in the past, like Airbnb or like Beyond Meat or whatever it was. I think this actually sustains a really quality value. This is the second time it's IPO'd, right? Once in the 90s, and now it was taken private, and now we have this. So it's going to be interesting to see what shapes up in the next few weeks. As far as the S&P 500 goes, in terms of the futures, we popped pretty well overnight. We held the 45.23 level, a massive pivot from yesterday based on order flow. We're well above the level right now, up about 20 points. We're coming into prior resistance, into 45, 43s, 45s. That's going to be a huge resistance for price. I know that the U contract is not necessarily trading those, but we're on the Z right now, and it's going to act as resistance as we just traded it. We just filled out some of that resistance, and I think we can see pullbacks. I think as long as we can hold 45.23 today, there's going to be upside momentum, and I don't discount prices getting into 45.60 and even higher, right, into the end of the week, as long as we can hold that order flow pivot of 45.23. I'm going to be watching to see if some buyers step in around those low 30s to initiate the buying, but we have a huge resistance into these 40s. It's going to be pivotal for price to break through that area, and of course to hold some of those supports to the downside. That's what I'm going to be watching today. I wouldn't be surprised to see a little pull off, meaning sell side from those mid to low 40s initially to get some of that profit taking out of the way. But I am going to be looking for some of these dips to buy, as a lot of people are just entering short positions, expecting this thing to turn over on its head and just completely get destroyed. And I don't necessarily think that's the case right now. It can come, but I think we still have a bit more upside to squeeze some of these shorts out before we get that next leg. So with that being said, let's open up our live trading room. Yesterday, we killed it in CPI. We're going to do the same today, and especially on the Fed event that we're going to be trading live with our team next Wednesday. So make sure to check that out. So I'll see you guys then, and enjoy today. And we'll see you guys tomorrow as well. So thank you and take care.